Hello everyone. Now we are going to look at the types of candles. Now this is the most exciting part of technical analysis. If you must pay attention to anything, it must be the types of candles and how to understand what they mean. Okay, the first type of candle that we're going to look at is called a hammer. Now if you look at these two candles, one is green and the other one is red. If you take this candle and you twist it 90 degrees in a clockwise direction, it would look sort of like a hammer because it has got a head like a hammer, then it has got the handle, which is the wick. So that is why it is called a hammer, because of the way it looks. If you look at some of the hammers that they sell in a hardware, they sort of have got this shape. So that is why it is called a hammer. Now, where do you find a hammer? A hammer must be looked for at the bottom of a downtrend. Now, for example, a share has been going down maybe for the past 3 weeks. Then it reaches a point where you see a hammer forming. Then you know that this is a hammer that you need to pay attention to. If a share is in an uptrend and you see a hammer, it's best to ignore that hammer because it doesn't mean much to you as a trader. So you always look that the share has been going down or trending downwards, then see if a hammer develops at one point in the trend. Now, what does a hammer signify? It signifies that though the price was going down, it's about to change trend. Now, what is going to change trend, you do not really know, but you just know that a change is about to take place. If you are a trader, then you become alert because an opportunity is around the corner. How is this confirmed? It's confirmed when you see the price moving above the price of the hammer. So in other words, if this was a daily candle and it closes as a green hammer, and the next day price starts trading above the price of this hammer, then you can consider that as confirmation that the downtrend has ended and the share is now entering an uptrend. Now, since it's entering an uptrend after a sustained downward move, this uptrend is going to be quick in the initial stages. So in other words, you might be able to cover 10 to 15% within a few weeks of the trend changing in the direction of upwards. As a trader, that's what you need. If it can move within a week upwards, 15%, then you have made 15% that other people are having to wait for a year. You have made it within a space of 2 weeks. It means you are growing your money faster and you are making money more than the other people who have put money in fixed deposits, for example. You need to make sure that the wick is 2 times the length of the body. In other words, the tail of the hammer should be equal to or more than 2 times of the body. So the body of the green, when you measure it from top to bottom, can it fit 2 times across the line at the bottom? If yes, then that's a good point. You have got a hammer. Sometimes it's not 2 times, or it can be closer to 2. There are times when you have to use discretion, but what is important is where it goes to after that formation. A green hammer means that the price opened at the bottom of the candle and then it was pushed further downwards. In this case, it was moved all the way to the end of the black line or the wick. Then the buyers came in and pushed the price upwards. So they were outbidding the sellers. Then it moved up again and closed higher than it opened. So imagine this was a market previously where there were many sellers dominating the market. Now suddenly there are more buyers starting to show up than the sellers, which means that there's probably no more people who are willing to sell at the prices that are at that level. Then when the buyers move in, they are going to now take the price up. So this is a good thing for you if you are going to go long on a particular share. A red hammer is considered to be a bullish sign when it is at the bottom of a downtrend. Though in this case the price, it opened higher and closed lower, it still shows that the sellers tried to pull the price all the way down, but they were pushed back towards the upside by the buyers. Though the sellers won the day, they did not win as they did in the previous day where there was a downtrend. However, we consider a green hammer to be more confident inducing than a red hammer. However, both can be good to trade when the price starts trading above the level of the top side of the hammer. Then you can say you have a confirmed uptrend that is beginning in a share price, and the risk of price going down is lower, and the reward of the price moving upwards quickly is higher. So those are the types of trade that you want to enter: lower risk and higher reward trades. However, you only enter in when there is a confirmation that price is resumed on the upside. If you are somebody who is more risk tolerant, you might want to say, I can accept any price as long as I've seen a hammer. But then you know that if there is no confirmation, it might resume and continue going back downwards. So confirmation is always important. We will look at more candlesticks, but for now you need to open charts and look at the hammer pattern at the bottom of a downtrend and see what happens thereafter. Thank you.